Here is a question that might change your entire financial worldview. What happens when the world runs out of the one metal that makes modern life possible? We're trained to look at gold as the ultimate store of value. We look at gold as the safe haven. But gold is lazy. It sits in a vault. It does nothing. Now, look at silver. In 2026, silver is no longer just a precious metal. It is a strategic technology metal. Without silver, the solar industry stops. Without silver, the electric vehicle revolution fails. Without silver, the hardware running artificial intelligence overheats and dies. For the last 5 years, we have consumed more silver than we have mined. The math is broken. We are burning through the world's inventory at a record pace. Today, we're going to look at the undeniable data behind the industrial demand that is driving silver. We are not talking about coins or jewelry. We are talking about the fact that 55% of all silver mined is now disappearing into industry, never to be seen again. Is this the year the supply chain finally snaps? Let's look at the numbers. To understand why 2026 is different, we have to look at the supply and demand deficit. According to the Silver Institute, the global silver market has been in a structural deficit for 4 consecutive years. In 2022, the deficit was 237 million ounces. In 2023 and 24, it remained near record highs. Here's the problem. We cannot just mine more silver. Most silver, about 70% of it, comes as a byproduct of mining for lead, zinc, and copper. We do not have dedicated silver mines that we can just switch on when the price goes up. It takes 10 years to permit and build a new mine. But demand? Demand is vertical. We are currently eating into the above-ground stockpiles in London and New York at a rate that is mathematically unsustainable. The vaults are draining. And unlike gold, which is recycled at a high rate, the silver used in industry is often consumed in such small quantities per device that it is not economic to recycle. It ends up in landfills. We are literally throwing away the most conductive metal on Earth while demand explodes. The first and biggest driver is photovoltaics, or solar energy. If you think solar was big in 2020, look at 2026. Governments across the world, from the United States to China to India, have mandated a shift to renewable energy. Silver is the single most efficient conductor of electricity and heat. It is the veins and arteries of a solar panel. But here is the data point that Wall Street missed. The technology changed. We moved from the old PERC cells to the new TOPCon and HJT cells. Why does this matter? Because these new, more efficient panels require anywhere from 20 to 50% more silver per panel. In 2023, the solar industry consumed roughly 190 million ounces of silver. That was already 14% of total global supply. In 2026, estimates suggest the solar industry alone could consume over 250 million ounces. That is 25% of all the silver mined on planet Earth going into just one industry. As the world races to hit net zero targets, they are effectively putting a massive buy order on silver that never ends. Driver number 2 is the electric vehicle or EV sector. Now, even if EV sales growth slows down slightly, the intensity of silver use per vehicle is skyrocketing. A traditional internal combustion engine car uses about 15 to 28 grams of silver. It is used in basic switches and contacts. An electric vehicle? An EV uses nearly double to triple that amount. We are talking about 25 to 50 grams per vehicle. Why? Because silver is needed for the battery management systems, the high-voltage connectors, and the intricate electronics that make the car autonomous. Every time you see a charging station, think of silver. Every time you see a Tesla or a BYD on the road, think of silver. With global auto production hovering around 85 million vehicles a year and the EV market share climbing past 20%, the automotive sector is quietly becoming a monster consumer of the white metal. And just like solar, this silver is essentially lost. It is buried in the car's circuitry. This creates a permanent floor under the price.
The automotive industry cannot switch to copper or aluminum without sacrificing performance and safety. They are price inelastic. They need the silver no matter what it costs. And now the wild card for 2026, artificial intelligence. When we talk about AI, we usually talk about software, coding, and chatbots. But AI doesn't live in the cloud. It lives in physical data centers. It lives in high-performance chips, and it lives in the 5G network infrastructure. AI processing requires massive amounts of power and speed. To handle that load without overheating or losing data, hardware manufacturers need the best conductor known to physics, that is silver. Silver is used in the high-grade connectors, the semiconductor packaging, and the 5G towers that beam the data to your phone. The demand for electronics was already steady, but the AI hardware boom has added a new layer of urgency. We are building data centers at a rate we haven't seen since the dot-com boom. Every server rack represents ounces of silver. While we don't have perfect data on exactly how much silver AI specifically consumes yet, we know that the electronics and electrical category is the largest industrial segment for silver, consuming over 400 million ounces a year. With the AI build-out, this number is only going up. So we have solar demanding more. We have EVs demanding more. We have AI demanding more. What about the stockpiles? This is where the forensic data gets scary. Look at the inventories at the COMEX in New York and the LBMA in London. These are the two biggest vaults in the world. Since 2021, these vaults have been bleeding silver. We have seen hundreds of millions of ounces leave these registered vaults. Where is it going? It's going to China for solar production. It's going to India for investment. And it's going into the factories of Tesla and Samsung. We are approaching a point where the registered silver, the stuff that is actually available for sale, is getting dangerously low. When inventory gets this low, price volatility explodes. The industrial buyers, the companies like Samsung and Apple, they can't afford to run out. If they smell a shortage, they will panic buy. They will buy inventory for 3 years just to be safe. That's how a squeeze happens. It's not driven by investors like you and me. It's driven by industrial titans fighting for survival. Here's the bottom line for 2026. Stop looking at silver as the poor man's gold. That's an outdated narrative. Silver is the rich man's copper. It's an industrial necessity disguised as money. The laws of supply and demand are undefeated. You have flat mine supply colliding with exploding industrial demand from 3 different revolutions happening at the same time. The math says the price has to move. The industry cannot function without it. If you are holding silver, you aren't just holding a metal, you are holding a call option on the future of technology. Do your own research, look at the deficit numbers yourself, and decide if you want to be on the side of the scarcity or the side of the paper money. If this video gave you a new perspective on the metal markets, hit that like button and subscribe. I'll see you in the next one.